Welcome to the Debt Dive. Today, we're getting into co-funding. It's this investment strategy that seems really tied into current ideas about, conscious capitalism and leading with values.
Exactly. We've looked at some material that really breaks it down.
So what is it, fundamentally?
Well, at its core, co-funding is basically pooling money together. It's collaborative.
Okay.
Instead of one person trying to fund a huge project, a group does it. This means they can access, higher value opportunities.
Things like what?
Think big real estate deals, maybe promising startups, innovation projects, stuff that's often, financially out of reach if you're going it alone.
Right. The scale is just too big individually.
Precisely. The whole idea is tackling these opportunities collectively.
Okay, so the material talks about democratizing access. How does that work in practice? What does co-funding actually open up?
Yeah, that's a key part. It really shifts who gets to play in certain investment arenas. Traditionally, those massive multi-million-dollar deals, they were mostly for big institutions or, the super rich.
Yeah.
Co-funding lets more everyday investors get involved by, combining their capital. So maybe you can invest in a piece of a large property for a fraction of the total cost.
Making it much more achievable.
Definitely. It opens doors that were locked for a lot of people.
And it's not just about the cash, is it? The source material connects it strongly to personal values.
Absolutely. That's a huge angle. In this idea of a conscious economy, co-funding gives you a direct way to sort of put your money where your mouth is.
So you can back things you believe in.
Exactly. You can collectively choose to support, say, green energy projects, or businesses with a strong social mission, or maybe something preserving cultural heritage. It connects wealth building with your actual beliefs.
It feels like there's a community element there too then, more than just wiring money.
Oh, for sure. It's definitely not a solo game, as material points out. A co-funding project naturally creates this group of investors with a shared interest.
And they bring more than just money.
Right. They bring different viewpoints, life experiences, sometimes even direct expertise that can help the project. It creates this whole supportive ecosystem, which is quite different from just clicking buy on a stock.
Interesting. The notes also mention a hybrid economic approach for some strategies. What's that about?
Yeah, that's pretty forward-thinking.
Oh.
Some co-funding models are set up to give you exposure to both tangible assets like property, something physical, and also growth areas in the digital world.
Like tech.
Yeah, emerging tech, maybe innovation hubs, things like that. So it's blending the sort of stability of physical assets with the potential upside of new industries.
Yeah.
Adapting to the new economic era, really.
Makes sense. And this seems to really connect with what the text calls purpose-led investors. Who are they in this context?
These are investors who, they see wealth differently. It's not just about accumulating personal profit. They view it as a tool for making a positive impact, for empowering others. Co-funding sits right into that because it's inherently about shared goals, shared prosperity. It's a practical model for a more conscious capitalism.
There was that specific example mentioned, a $10 million property deal done via co-funding. What did that highlight?
Right. That example really grounds the concept. It showed it wasn't just a financial transaction to buy a building. It was presented as a chance for the investors to be part of something bigger, an ethical, impact-focused way to build wealth. It framed the investment itself as a way to, quote, lead with purpose.
That ties into a key quote from the material. The transition from economic to conscious structures starts with individual inner alignment.
That quote really hits the nail on the head, doesn't it? It emphasizes that this whole shift, it isn't just about changing financial systems externally.
It starts internally.
Yeah. It starts with each investor making that conscious choice to align their money with their values. It's an inside-out process.
So wrapping this up, the benefits seem clear. Co-funding can widen access to bigger investments. It lets you align your money with your values. It builds a sense of community.
And it can offer these modern hybrid investment strategies, too. It's a forward-looking approach.
Definitely a different way to think about investing and building wealth. It feels more active, more participatory.
Exactly. It's about taking an active role in shaping potentially a new kind of economy where impact and values are baked right in.
It leaves you thinking, doesn't it? How could models like this, these collective investment approaches, go beyond just changing personal finances? Could they actually start to reshape broader societal values and what we prioritize collectively?
That's the big question, isn't it? A powerful thought indeed.
Definitely something to mull over. Thanks for breaking that down with me.